Thank you for your patience, ladies and gentlemen. This is the next session, Hidden Layers of DPI for Financial Inclusion, Design Choices and Policy Recommendations. Now, may I please invite on stage Ms. Kamya Chandra, co-founder and Chief Strategy Officer, Center for DPI. Please welcome her with a big round of applause.
Thank you, guys. Thanks for taking the time to be here amidst this very large mela, I would say, Fintech mela that we have here today. The goal of today is to sort of just walk you through some of the different digital infrastructure characteristics that we see. A lot of Fintech players, a lot of banks tend to take this stuff for granted in India today. And a lot of them actually don't use it to its full potential. So just so I get a pulse check of the room, can I get a show of hands for the number of folks that consider themselves like in Fintech roles versus in financial institution roles, or in sort of think tanks and policy kind of folks? So one round for financial institutions directly. Anyone here working directly with financial? Okay, I see. Which institution are you from? Just call out. Sorry? SBI Card, lovely. Who else do we have here? TransUnion Civil, excellent. Any others, financial institutions? No? Okay. Oh, so then who do we have? We have Fintech folks, product folks in the room. Show of hands. Okay. Excellent. Excellent. Any product names, companies you guys can call out? PayPal. Okay, interesting. All right. Any others? Sorry? Sai Birla. Okay, excellent. Okay. SN? Oh, ASN. Okay, not familiar with that one, but I'll learn about it. Lovely. Okay, and who else? Anyone else that's not considering themselves financial sector product or financial institution? Yeah. Cybersecurity. Okay, excellent. Anyone else? Fintech stories. Okay, interesting. All right. Students, I see. Okay. No, as a student, it's a good place to be as well. So it's good to hear kind of the mixed backgrounds in this room. The goal of today kind of is to run through the different digital public infrastructure that exists in India today and that exists around the world, and how we can kind of build on that. Before that, just so that you know, I'm sort of the co-founder of the Center for Digital Public Infrastructure. We provide, we're an academic think and do tank in that sense. We provide pro bono DPI tech architecture advisory to countries around the world through philanthropic funding. Tend to have an action bias and try to stay software neutral. So we're asking what are the infrastructure rails and what are the products that can get built that can actually catalyze the access to financial services. Before that, take a step back to understand what digital public infrastructure actually means. Of course, we're all familiar with physical infrastructure. We know about roads, railways, even internet cables we consider physical infrastructure. But what we're talking about when we say digital infrastructure is sort of the open tech standards and systems that are widely available that tend to have hugely sort of multiplier effects on access to services, right? So we talk about identity as a very common one, signatures, payments, data, discovery and fulfillment, many others. But the key is that these drive public and private innovation. And for us, digital public infrastructure is not about saying, okay, what is the highway you can build? It's about being inspired by the original digital public infrastructure. So when I told you that the internet cables are physical infrastructure, the DPI of the internet is actually the TCP/IP protocol, right? Which allows for any computer that was invented from 1990-ish until now to really talk to any other computer on the internet, which is quite phenomenal considering how device agnostic it became, right? We couldn't imagine the smartphones and tablets that we have today. Similarly, GPS. GPS was actually invented after a horrible plane crash of Korean Air 007, which was sort of an avoidable plane crash because there was a lack of satellite information on latitude, longitude positioning of airplanes. And so President Reagan, as a result of this catastrophe, said, look, we'll make, at that time, available this positioning system of 2 data points, latitude and longitude. And that became a really powerful inspiration for Aadhaar, which only collects 4 data points. It was kind of based on this minimalistic sort of unlock. And then if you look at Uber, the Airbnb, all of these infrastructure that wouldn't have existed if it weren't for GPS, that's the sort of societal scale you're trying to imagine when you think sort of DPI. And finally, mobile and sort of GSM standards. Today, we don't think twice about picking up a phone sitting in Uganda with sort of Airtel Uganda and being able to call somebody sitting in the US on a different device. You can be on an iPhone, they can be on an Android device, a different operating system, a different mobile network provider, but we have complete voice interoperability, and that was a decision that was taken by the GSMA and sort of others to ensure that you have global voice interoperability. So these are the scale of infrastructure we're talking about when we say DPI. But practically speaking, what do we mean today? Today, we're talking about three major kinds of systems. There are others, but most commonly, DPI, data payments identities. Like, that's a very simple way to kind of remember it. When we say identities, we don't just mean your identity as Aadhaar, which is very commonly sort of taken away. We actually mean any noun in a digital ecosystem can have its own identity. So if you're a parcel of land as an object, you're a business, you have a business identity, you're a farmer, you have a farmer identity. And the idea of all of these is that they're verifiable identities, and they're not actually sort of just digital in the sense that you swipe a card, and if you don't have authentication, if you don't have connectivity, you can't actually verify that card, right? So the idea is to have universality of that inclusion through that identity. Payments infrastructure, we talk about three major characteristics that come together. It's not just any kind of payments, because we wouldn't consider most card payments to be DPI. And if you pause and ask, well, why is that? It's because there's sort of three characteristics that combine in a good DPI for financial sector and payments. It is the fact that the payments are instant, okay? Interoperable, which is also common. If you think about cards, they are interoperable across financial institutions around the world, but also inclusive. And this is where I think cards might have missed that boat, where they weren't able to be as inclusive. And usually, for example, mobile money ends up being inclusive and instant, but not interoperable, because you use M-Pesa in Kenya, you can't transfer money to someone who's not in M-Pesa. So these sort of three major characteristics are how we look at DPI for payments. And then for data sharing, there's two major kind of buckets. One is sort of anything real time, which is required for anything that's dynamic. So if you have bank statements, or you have credit scores that are constantly changing, this kind of data requires real-time APIs for data sharing. And around the world, you have a number of standards for that. India's account aggregator framework is a great example of that. But you also have the ability to share sort of non-dynamic data, things that stay the same for a long period of time, like your land records, or let's say your tax identifier. This kind of data is usually stored in verifiable credential format and credential wallets. So DPI infrastructure for data sharing tries to build these kinds of ecosystems to drive asynchronous, but consistent across government sort of and private sector fetch of credentials for reshare. So in India today, your income tax returns, for example, are available as verifiable credentials, because they're available in digitally signed form. But your other financial statements, like your bank statements, are available in real-time form via account aggregator as a framework. The Goods and Services Tax Network shares data in real-time form by joining the AA framework. You also have DigiLocker, which enables infrastructure as asynchronously. It's also a mechanism of creating verifiable credentials, but of course, India is complex and not everything gets routed through the same channel. And so income tax returns are not on DigiLocker, but also credentials, right? And you can also access your GST certificate as a verifiable credential. So these are the three main sort of buckets that you can think through. The interesting thing about DPI, which is sort of the interplay of multiple of these factors, is the idea that you can actually leverage open technology with good governance and strong policy to drive market innovation. Now, usually you have sort of either a fully public stack, or you have a fully private stack. Like either the public sector is saying, I will build the app, and I will build the backend, and I will build the rails. Or you have a fully private walled garden where you say, someone like Apple or OpenAI today is trying to build the whole stack within their ecosystem, right? They say you have to use OpenAI in order to access the OpenAI Play Store, which just released a week ago. So in order to kind of square this circle of saying, how do we actually enable public interoperable rails but allow for private innovation, the thinking is to craft these open tech standards, open protocols, and then have them be governed in a participatory way in order to allow many folks in the market to innovate. Now, luckily in India, we've seen lots of examples of this. The best DPI that we've seen takes these 5 major principles together. First, of course, interoperability. Interoperability is a big buzzword. The way I always explain it simply is USB-C, right? Think about your life before USB-C. Think about your life before a universal adapter. Those are tools of interoperability. They make sure that you don't have a mess of charging cables and wires in your house and in your virtual systems that are built across government departments. It's really important to have those baseline specifications. Usually, they're pretty simple, right? You don't see very, very complex-looking standards that are extremely successful. So interoperability, minimalism, right? The idea of building less in order to allow it to be reused. The idea of driving private innovation, the idea of ensuring that it's federated as an ecosystem and decentralized, and finally ensuring security and privacy by design. These are the core things that sort of drive digital public infrastructure. But now I'm going to spend probably the next 10, 15 minutes on this one slide, because I think it's quite important to understand the different building blocks that India has built and the order in which they built them and how they actually allow for different elements to come together in unexpected and unusual ways. So if you think about the journey of credit for a small merchant, right? Let's say this kind of street vendor that's outside probably this hall, right, trying to sell something. How does that street vendor prove their access to different digital infrastructure and their ability to kind of reuse that in order to access a loan? First, we gave them Aadhaar, which is Nandan downstairs, so 24 billion electronic KYC authentications. The power of that was that you could also use it alongside additional identifiers for businesses, right? So for example, PAN became an individual tax ID and an individual identity for different kinds of human organizations beyond just the individual. And then you saw the Goods and Services Tax Network, which identified businesses at a national level that were previously only state-wise identified. So suddenly, before, in the pre-GST regime, you had about 6 million registered businesses in the VAT regime. Once you transitioned over to GST and you created consolidated centralized ecosystem, it grew to about 10 million plus businesses that were kind of registered in that ecosystem. What's different about these? It's not like an ID is a different, is a novel concept, right? Because identifiers exist all over government. The difference between the approach taken to both of these was that they had electronic authentication built in multimodal format from day one. If you look at the GSTN certificate, from day one, it was issued as a credential with a digitally signed QR that enabled any business to say, I'm GST registered, therefore, I have some trust in the ecosystem, and I can use that to sort of apply for different loans and things like this. But beyond that, it was still sort of fragmented until you saw the introduction of DigiLocker, which sort of came in and said, look, I'm going to allow you to generate more credentials across difficult-to-reach government departments. So not just the big authorities like tax or ID, but I'm going to go to the National Highways Authority and bring on auto registration. I'm going to go to land records, right? I'm going to bring in COVID vaccination certificates, state and local district level kind of elements in order to make sure that those with lower capacity across government were also able to generate verifiable identifiers, right? Once you brought that in, then you said, look, there's a small business ID that's a very accessible credential for a street vendor to bring in, because otherwise for them, it's very high friction to go get a GST certificate. You need a certain turnover to be able to access that and so on. And so you said, look, Udyam is this easy to register based on Aadhaar plus PAN, plus a series of self-declared fields. So you're starting to see how these blocks kind of built on top of each other in order to ensure that you start to solve or access different pieces of the puzzle. Finally, of course, property and vehicle records came in on DigiLocker, and these became collateral, right? So today, when you apply for a loan, you either have to prove your income through your back statements, and you have to prove sort of what you have as a risk collateral for the bank. And so finally, what we have today is that all of these different kinds of records are now accessible via a single API for the financial sector of DigiLocker. So today, you can set up single point of access with DigiLocker to be able to fetch your Aadhaar, your Udyam, your PAN, your COVID vaccination credential if you're applying for a job, and all of your collateral information in a single call. And this was unprecedented because who was going to go across 55 national ministries and 800 plus state and sub-local authorities to be able to bring everybody onto one platform in our political economy? It wasn't possible. But it only happened over sort of a 10-year period of gradually building up a program of generating this kind of data and giving it back to individuals. The second, so if you've sort of seen all of this be solve individual and entity KYC, the second big component was around electronic signature. And this is a DPI that's often forgotten, and I really think it's underused. So if you go back to your companies today and you want to go back to work on Monday, post GFF, slightly hungover, what do you want to tell them? You want to say, guys, I have a product idea for you. We should make all onboarding for our digital product seamless based on electronic signature. Because what this does is it's supposed to eliminate any kind of paper signature. So today, we shouldn't have paper signatures that are recollected at every stage. But we still, unfortunately, have financial institutions every time we have to open an account. If you're in the privileged few, someone comes home with a stack of paper this thick for you to sign every page. Or you have to go to a bank branch far away and wait for the forms to be given to you and then sign those forms. So today, eSign has actually been crafted as an infrastructure that's not tightly bundled with Aadhaar. So I'll say that again because it's important. A lot of people think Aadhaar eSign is Aadhaar eSign, which means I can sign anything with my Aadhaar. But the way the ecosystem and the protocol is set up, Aadhaar is actually distinct from eSign and unbundled as per the principles that we said earlier, so that you can actually use eSign to sign using any digital identity in the country. So if we sort of decide that we want to sign based on Udyam for MSMEs to be able to do entity signatures, that's possible today using the eSign architecture that we have that allows rebundling, right? So I think it's powerful to sort of think through and say, well, this was built as a separate component, been around for 10 years. As Nandan said downstairs, it's finally hit 1 billion transactions. But considering how much paper we all sign, I think it can probably get to 10 to 20 billion in just a year or two if all of you go around and tell everyone else to kind of integrate where possible. Of course, we all know about UPI, so I'm not going to talk too much about it. The power of UPI was actually in its programmability. So the fact that we have UPI is powerful to send payments to each other. The power of it to solve credit is actually the layer on top of UPI, which allows for UPI autopay, which means I can sort of do a automatic collect, like a direct debit equivalent that's layered on top in order to, let's say, collect loan amounts. And this is an extremely powerful thing to do. We met the Netflix co-founder, Reed Hastings, a few years ago, and he said, UPI autopay is my favorite feature, because that's how they got all of their subscriptions through the roof. So if your business or your product is not using autopay for its loan operations, for its insurance premiums, any sort of recollection, it's a missed opportunity, right? And really should be used in a bunch of different product flows here. Finally, we also saw Bharat bill payments, and I think enough people don't talk about Bharat bill payments. It's like the second cousin to UPI, but it's a truly remarkable infrastructure on its own, which is actually completely unbundled from UPI as an infrastructure, in the sense that today, the goal of Bharat bill payments was to say every invoice that exists in the country is just a bill from one entity to another. Whether that's a business paying a bill, whether that's you paying your kids' school fees, whether that's you collecting a loan repayment, all of that can be framed as per a single specification that just talks about the ability to fetch money from a certain biller and asking what the bill status is. Now, the fact that you have that unbundled means that you can actually use any of the UPI apps to be able to fetch your bills, but then actually pay using any mechanism beyond that. You don't have to use UPI to pay using a BBS. So a lot of the time, we get asked, like, why not all of my payments are done through UPI, so I would like to have, I don't know if I should use BBPS, but actually BBPS is sort of not at all related to UPI in that sense. You can set it up and have people pay by NEFT, RTGS, IMPS, any other sort of system. And so therefore, for financial product designers, it's really important to be able to craft that. Finally, the last building block that we've seen is the one that I work most closely on, is the account aggregator ecosystem. Now, India started open banking before it was cool. Like, all you saw about open banking in 2015, 16 were conferences in the UK and Europe that talked about the power of open payments, right? And quietly, India was executing on both the payment side and the data side of open banking. The uniqueness of the account aggregator ecosystem in terms of a design choice that is distinct from the ecosystems in other countries is the separation of the consent manager, which is a really powerful design choice. So for example, today when you think of open banking ecosystems everywhere, they say, look, here's the data provider, here's the data user, you have to build a pipe between them, and we're going to specify the standards for that pipe. The difference in what India did in terms of the hidden design choice was actually to say, we will create an intermediary called a consent manager, called an account aggregator, that can actually square the circle of the fact that you have infinite number of potential information providers and information users who won't have the bandwidth to make bilateral connections with end-to-end kind of institutions. And so therefore, you have a low number, high teens number of account aggregators that can actually integrate across the ecosystem in order to make sure that you can actually reach scale across different sectors, right? And so the three major specifications that were really important for account aggregator were the financial information specification, as well as sort of the thinking around the information providers and users, and the consent request. So how do I actually have a granular digitally signed consent? So the unusual thing now is between all of these building blocks that are all owned, built, and operated by different people across the ecosystem, you can now craft an end-to-end digital loan journey, right? So you can do your collateral and KYC verification using a combination of these building blocks that exist. You can sort of do a digital e-signature. You can set up automatic repayments using trusted rails. And you can use account aggregator, which is at about 308 million transactions, to access any kind of financial data about the individual's history in order to better do your kind of underwriting. We have a specific kind of example in terms of a demo, which if the demo guards are kind, we'll be able to see it. Should I press play if it'll work? It's kind of a walkthrough of a flow. Nahin, audio nahin hai. It's just video, yeah. So if you see it today, yeah. So here are the steps to open a current account that would happen with any typical sort of bank. You'd have to share your personal details, business details, et cetera. So you can start off by saying, I need to sort of do a digital KYC. You enter your PAN, right? And based on that, your GSTN can be fetched from your PAN. After that, you can set up your Aadhaar number sort of with DigiLocker, do a one-time password, which allows HDFC Bank in this case, just an example, it could be any bank, to fetch. And based on a single API then, is able to fetch both the Aadhaar and Udyam, which is a complete KYC done in one step for the entity, right? Which today is a multi-step process. Then you can sort of continue with sort of declared details around the individual in order to sort of round out the picture in case there's some elements missing, and self-declared business details around the constitution type, as well as the sort of track of the business, right? Business address then can be fetched from the GST, Goods and Services Tax ID. And then you can select the branch. This is a real flow. That's why there's additional steps. So then basically you can say, I'm going to choose the kind of account that I want to open, MSME current account, in order to maximize the benefits of various schemes, review the details that are submitted, right, and aggregated by these multiple credentials in one go, and the MSME account sort of can be created successfully. So today, for SMEs, account opening is a high friction sort of activity because they usually have to go somewhere physically, but it really doesn't need to be considering the digital rails that exist today. So then they can move to the personal loan journey and they say, look, I want to do income verification, select my accounts to connect as per account aggregator, insert OTP, this is to see the consent request, and data then can be shared in real time via the account aggregator in order to get a loan offer. So the loan offer is then customized based on your business information, and your account aggregator-based financial data. Finally, you can finish your electronic KYC. Once again, the pieces that are coming down from the top are the stack so that you can kind of track which parts are DPI versus which parts are private innovation. You enter Aadhaar one-time password, verify your details, and based on this, you sort of proceed to the loan agreement after combining all of these items. Then you add sort of your video KYC element. You can upload your selfie, which is a seamless now ability to close. And finally, you can share your tax data via the same account aggregator rails in order to prove your business income, right? So in order to make sure that your individual income is also complemented by your business tax invoices and returns. So these are the GST returns that are available on account aggregator 1 and 3B. 2A are also following soon. And then you see which GST accounts are available. You can share GST data again. Finally, in order to close it, you can complete with an electronic signature based on Aadhaar. That's an OTP-based flow to ensure that you are signing without physical presence. And then you can kind of set up the repayment for that loan process. And that can be done based on UPI AutoPay. And eNACH is also an option, by the way, but the setup rates for UPI AutoPay are slightly better. So in order to do it, you go back to your PhonePe app, and then you complete the loan, and then you've gone through the entire journey, right? You're setting up account, sharing financial data, as well as accessing a loan. And this is made possible, again, by multiple blocks. So I think it's the goal of the financial sector ecosystem now to accelerate the usage of blocks that exist, rather than to try to solve by creating new sort of roundabout processes to access some of these. Any questions on this demo before I quickly go ahead? No? Yeah, go ahead. Yeah, so that would be typically within the financial institution's purview. That's not available as a standard DPI rail across multiple institutions, because the decision to sort of close a loan is dependent on the lender specifically, and then eventually should get updated in your credit bureau, like we have some CIBIL folks here, right? So it should get updated, but the ecosystem to close the loan is sort of institution dependent rather than a cross-sectoral infrastructure. So I think one quick thing I'll come back to questions in a bit. Thank you. One quick thing to cover on IDs and payments is we think that we're very special in India. We're actually not that special. So many countries around the world have actually crafted IDs now with electronic KYCs built as a layer on top. In Africa, Rwanda, Nigeria, Malawi are the big examples. Thailand, Indonesia, as well as Singapore and South Korea have these. I'm putting these out just in case you're framing your global product expansion strategies. It's powerful to go to countries that already have a similar set of digital infrastructure with open APIs in order to ensure that your product flows don't have to get as customized to the unique physical sort of requirements in that context. So finally, I want to run through a few sort of hidden implementation truths, right, for scale. The first is this approach to committing to standards and not to platforms. Now, it's really easy to say, I'm going to build a unified portal that's going to combine all of this, and I'm going to collect all of the data myself. But the commitment, I think, that India had and a few other countries had to say, we will actually stop at the standards level and allow for private innovation on UX was a very important one, right? Because without that, you're restricted to the user experience of the single platform you sort of set up. The best way to think about this is to think about GSTN. Before GSTN opened their APIs for filing, their website was down, for the 3 days before the filing and 3 days after, right? Every time this happens to MCA, this happens to income tax and many other departments. But once they started opening up APIs for tax filing, you saw that over 50% of the filing moved to these third parties, whether it was sort of ClearTax or your EY or other sets of good GST Suvidha providers. So this decision to open up tech standards is a crucial one to sort of drive scale. The second one, in terms of a design principle, is the importance of very strong nudges and programmatic incentives, but no mandates, right? So we found that any time a government has tried to say, and everyone has to adopt this digital infrastructure, it usually results in either a checkbox implementation that doesn't actually achieve the results because people claim that they've put in the box and then the quality standards, SLAs don't meet those criteria, or it just results in objecting to the infrastructure when actually they should be seeing value in what kinds of product flows can be built on it. So we suggest that there's not mandates that are put out. If you want to mandate institutions, that's a different thing, but we should never mandate users. That's kind of our principle, right? Third is sort of opportunistic upgrades instead of grand plans. And this is kind of an important one because we tend to try to lay out and say, look, we're going to craft this, this is the grand vision for how the sector is going to transform. And in a country as complex as India and many others, it's very hard to organize efforts across this many different departments, institutions, et cetera. So it's more powerful to say, can we have different departments identify what everyone has, and then do an upgrade based on where there's good leadership, and watch that story kind of unfold. Even the story that I framed earlier around account aggregator, Aadhaar, payments, and all was not a grand plan. It sort of unfolded based on innovation, and that's kind of the way these have come to pass. Finally, partnerships with tech firms. Instead of, we talk to governments about this all the time, framing, instead of trying to do the in-house build it yourself, it's very powerful to set up, let's say, again, like open APIs for others to build interesting new experiences rather than to try to build the entire platform kind of yourself. And we saw this, for example, with the Beam launch, where the Prime Minister's office kind of had, and NPCI leveraged the work of JustPay to build Beam, right, as the first infrastructure, rather than saying, we will try to build the app ourselves, right? So I think we see this repeatedly through the ecosystem. We also point out to a lot of countries that they start with many different existing infrastructure that can be rapidly upgraded to DPI. So it's not like every ID, payments, or data system is operating as an infrastructure. So in order to do that, we usually suggest that if you have sort of an existing ID, you can add authentication or electronic KYC. If you have an existing fast payment system, it's often as per ISO 20022. You can upgrade it to be as per a machine-readable protocol that's more programmable. You can add interoperable QR and interoperable authentication, and so on. And for databases, the obvious sort of answer is open APIs and verifiable registries. So for India, we have a couple of key policy recommendations, and we'd be curious to hear what your views are on these. First, we think nudging account aggregator, DigiLocker, and e-sign adoption is super important because while the infrastructure has existed, the orchestration of adoption hasn't been as strong. It's been voluntary adoption, which is good for the ecosystem. But now it might be time to trigger the network effects through sort of organized adoption. The second is sort of transaction limits, which tend to be vested on the day that they were set up. For example, the UPI autopay transaction limit is still about 15,000, whereas for loans, whereas you can use UPI autopay to subscribe to an IPO for up to 1 lakh, right? So there's a little bit of dissonance there in terms of the transaction limit upgrade as per inflation. So we think there, as well as in a few other places, it's powerful to update the transaction limits with inflation in automated sort of triggered process at the regulator level. And finally, sole proprietorship KYC. This is an area where, of course, in India, I think we've almost solved individual Aadhaar eKYC through Aadhaar and its various modalities of auth. The challenge becomes when, as an emerging economy, you have somewhere you have this ecosystem that's not an individual and not an entity. And that is the sole proprietorship in India. We have about 55, 60 million of them in the country. You can't treat them as individuals because they're running a business, but they're just a one-man shop or one-woman shop. So the sole proprietorship KYC today, the terms for this are based on collection of documents which really don't exist in terms of their high coverage. And so our suggestion is to sort of modify the number of documents required for additional sole proprietorship KYC to just one under a specific loan transaction amount. We think this is very powerful, would be very powerful for financial inclusion. And we have been engaged with the Reserve Bank and others with these recommendations. So if you have other recommendations that you think would be powerful for this ecosystem, we'd love to hear them offline, and we can definitely have a chat about this as well outside. So I think that's the end of my presentation, but I wanted to give some space for maybe 5-6 minutes for questions in case there were any. Otherwise, I can give you time back. Yeah, sure, go ahead.
I had a question about the account aggregator.
Yeah.
There are no economics, there's no revenue or cost associated. Is that a good idea? Because at the end of the day, the financial information provider
Yeah.
does need to maintain some infrastructure
Yeah.
to provide that information.
Yeah.
There are costs involved with honoring every query.
Yeah.
And of course, the data that the financial information user is getting is valuable.
Yeah.
So there should be willingness to pay.
Yes. Yes.
Has that been considered? What was the thought process around
Yeah.
it? If you have any insight on that.
No, very good question. So I think after UPI was free, there was a lot of hesitation to introduce a new architecture that has commercial implications for fear of lack of adoption. But now I'm happy to report that there is an agreed upon commercial model for the account aggregator ecosystem that standardizes the price ranges from FIP to AA, as well as from FIU in terms of outward. And so what that does is it'll create some range for the account aggregators themselves to compete on price, but it does create a baseline benchmark for the cost of work done in that sense of setting up the infrastructure to accelerate. So that has been sort of discussed among the board, and I think they've gone through a consultative process of nearly a year in order to specify what those amounts would be. Business models are very fickle to negotiation and very important for a lot of players in the ecosystem. But it's a very good point. See, initially, I think when we were crafting the AA ecosystem, there was a resistance to framing a clear commercial model because it would feel like we are selling data. The moment you set up the architecture and you say FIUs pay X amount for X data pulls, you are immediately falling within the same, in some sense, the same category of private data brokers, right? Who are able to access and buy large packets of data, which seemed antithetical to personal data protection principles. I think that's why there was hesitation in the early sort of days/months. I think after there was quickly a realization that without some sort of financial model, it's very difficult to execute this at scale. And the difference here is that there's always individual consent for this data fetch. So when your data is sold by an institution to another institution, you are not party to that transaction. Whereas for AA, because it cannot move ahead without your personal consent, it might be all right to allow for individuals to sort of leverage that infrastructure with a clear financial model. So this was some of the thinking behind it, but great question. And if you want to get involved on that, please talk to me outside. We'll have a chat on the volunteering side. Yeah, go ahead.
Great presentation.
Thank you.
I was just curious, so in terms of, I don't necessarily work for a financial institution, I work with them. So I was curious to know how you would think about proposing projects in the DPI space, which you, as from my personal view, have visibility on, compared to sort of people in their own niches. So is that something that this CDPI also sort of...
Yeah, we do engage. Yeah. We do engage. We put out thought pieces on DPI that should exist. Usually it's inbound, so the government departments that we work with come in and say, we want a digital solution for X. And we have to nudge them away from the full stack digital solution to say, okay, just build the minimal layer and then allow for others to innovate. But again, happy to engage if you have sort of specific ideas. All right, thank you so much, everyone, for your patience. I'll give you, okay, we can talk outside. Yeah, thank you. All right, bye-bye.